Hey, this is Alan Brochstein from 420 Investor and New Cannabis Ventures, and this is the debut of something I intend to do every Sunday, which is to summarize the New Cannabis Ventures weekly newsletter. We've been publishing this newsletter for 6 years now, and I'm very happy to say this is my 8-year anniversary since I started 420 Investor back in late 2013. All this news that I'm going to talk about is available by link in our weekly newsletter, and I will provide a link to that in the summary. Like I said, this is a new effort of mine, just to inform my audience in a different way. If you have any feedback for me or ideas that would be helpful, let me know. So with no further ado, this was a rather interesting week, just from the stock perspective, which we don't really cover in the weekly newsletter. It was literally a down week for the New Cannabis Ventures Global Stock Index, but you have to understand one thing, which is that two stocks, and I wrote about this a few weeks ago, two stocks, Flora Growth and Agrify, have been really helping the index to go up more than it should have. It was kind of frustrating to watch the index go up when like almost every stock seemed to be going down. And this kind of reversed out this week. So that pressured the index. And so if you look underneath the hood, more stocks seem to be going up. But you got to look really closely. And what you'll find is it looks like some of the MSOs may have bounced this week. And there was certainly what I would call a flight to beaten up stocks. So this was kind of a trade this week we saw where people were selling some of the winning stocks and buying some of the stocks that have been under pressure for a while. And we saw some big bounces in certain names. If you care more about that, this is something I talk about at 420 Investor. But in terms of the news this week, it was pretty quiet. On the higher level, one of the issues that I think we're struggling with right now is it looks like the cannabis industry sales are really slowing, and I don't think that that's accurate, but certainly the data is a little bit cautionary. And so what's going on is a year ago there was a huge spike in cannabis sales, and that spike can be attributed to the pandemic, and there are a lot of reasons. First of all, there was a lot of anxiety in the summer of 2020, and people were turning to cannabis to help deal with that. But on top of that, there was nowhere to spend your money a year ago. Nobody was going anywhere. You weren't going to restaurants. You weren't traveling. And so people had disposable income, plus there were stimulus checks. But I think the bigger issue a year ago, and we saw flower sales really ramp up, was a conversion from the illicit market to the legal market. And I think that took place because the main reason was that a lot of, after being deemed essential services, cannabis dispensaries were allowed to do things that hadn't been done in the past, like curbside pickup and delivery. And so you finally had an Amazon-like experience where you could go online, look at the products and the prices, and then click and buy. And it wasn't exactly like Amazon because it didn't necessarily show up the next day with free delivery, but pretty close to the same thing. So that made a big difference. So this week we published the BDSA data for July, and it showed certain markets like Oregon and Colorado down year over year. And in general, July has one extra day than June. And if you look at the article, you'll see the growth was basically 2 to 3%. It was some a little higher, some a little lower. But basically what we saw is similar consumption rates or sales rates in July to June. So not a lot of excitement, but I think people may be concerned that there's a slowing. So in the months ahead, we'll see. I don't think this is going to be something we're talking about in 3 to 6 months. Another piece of news with respect to cannabis sales, and that was the Illinois sales came out. Illinois does a really good job of publishing its adult use sales very quickly. And so in August, I think it was 121 million, down a little bit from July when they held Lollapalooza in Chicago. Interesting to me is that this was a record month for out-of-state purchases. people coming in from Wisconsin, Missouri, Indiana, might be leaving out a state, Kentucky. And so a lot of the MSOs have set up border type operations. Cresco has a huge one on the border of Wisconsin, for example. There's a bunch down near St. Louis. And so that's a third of the sales, people coming in from out of state. Kind of interesting. But the year over year growth did slow, but it's still really high. And for those of you paying attention, you know that a big problem for the state has been the lack of dispensaries. And the good news is they've been awarding licenses, so hopefully that will ease up. Other news that came out last week on the M&A front, we saw some deals get done. One, Air Wellness bought 3 dispensaries for $80 million in Pennsylvania. This continues a trend that we've seen of MSOs really ramping up in the state and adding dispensaries. I know there's a hope that that state goes legal as well. And another M&A announcement was really interesting. As you're probably aware, Trulieve is buying Harvest. You're only allowed to have 1 license in Florida. And so it was always kind of thought that they would have to get rid of one of those licenses. Indeed, they found a buyer, Planet 13. And assuming that the deal goes through for Trulieve to acquire Harvest, and I think that's supposed to close in early 2022, that's a contingency. But if that deal goes through, then Harvest will sell its license in Florida to Planet 13, which would make it Planet 13's 4th state. Planet 13 plans to offer neighborhood stores at first, and then in 2022 it will introduce more of its superstore, initially in the Miami area, but it's looking at some other places as well. So that's a big change for Planet 13. A year ago, they were literally only in Nevada. Now they're in California. They just started with a superstore there. And then recently they, through a partner, won a license for a superstore in the Chicago area. And then the biggest M&A deal was an all-stock deal, $545 million. TerrAscend buying Gage. Gage Growth is a Michigan operator, a leader in the state, recently public company. Kind of disappointing, I guess, for some people, the actual price. It's one of these funny things. If you look at the stock chart, you'll see the volume picked up, but the stock's sitting near its all-time low. So I actually have a very well thought out perspective on this that I shared with my subscribers at 420 Investor, but I do find it very interesting, to say the least. So that was the M&A news that we shared. And then, the earnings reports pretty much came to an end. Harborside reported, and we shared that news. Harborside's year-over-year growth was flat, but they rebounded from a tough Q1. We published a lot of exclusive news last week. Each month, we talk about the index performance. We break these articles into 4 pieces. The ancillary index was actually up. This is a new index that we introduced at the end of March. This has been one of the big trends in 2021. The number of ancillary companies going public, we've seen a bunch of them. And so we've given that a lot more focus and given them their own index. It was actually up in August, even though the overall market was down. The American Cannabis Operators Index, which is about 90% THC companies, but also some CBD companies, fell hard. It was down double digit, and we kind of write that one up. Then the Canadian market was also weak. In July, the largest LPs kind of led the way down. That was not the case in August, but that market fell again. And then the Global Cannabis Stock Index, which is the large index we've been publishing, or that I've been publishing since 2013, was down for the 6th straight month. And so hopefully that's the end of that, but we'll see. On the capital raise front, 2 things of note. Number one, Lowell did a deal. kind of goes against what we wrote about in our newsletter last week, where I predicted that we were going to see more debt deals. But Lowell is a single state operator, doesn't have a big market cap. That's not really what I was talking about, to be fair. But they did a $18 million capital raise selling units in private placement. The interesting thing there was the majority of those went to a New York institutional investor. And then the other capital raise really made me look good. It was literally the first thing we published in the week. Last Sunday, I took the time to talk about not fearing big equity raises from the large MSOs. And I talked about in that article about how the debt markets were opening up. And I also mentioned there's plenty of sale leaseback money, like from the REITs. And so lo and behold, Ascend Wellness announced a $210 million debt deal. It had, I believe, a 4-year term, and it was done at 9.5% with no warrants. So a straight debt deal in the single digits. So this continues a trend that we've seen. This is very important because the cannabis industry is a growth industry, and they need to continue. So many states are legalizing, and it doesn't cost a lot to build out dispensaries, but cultivation and processing facilities cost a lot. And so this is important to see other funding sources besides equity, because if it's going to be equity, it's going to be pressure on the stock. So I was really glad to see the Ascend deal, and it really reaffirmed the point that I made just a week ago. And then we did 2 interviews. Carrie Pallardy has been doing these interviews for us for several years. It's one of my favorite features of New Cannabis Ventures. And we interview all sorts of companies, whether they're private or public, U.S. or international. This week, we hit a private company that I didn't really know that well, Grown. Very interesting interview, really liked that one. But Grown is a Oregon company. That's where they've been for a while. But they've been expanding in other markets. And their CEO, Christine Smith, founder and CEO, kind of explained how they're going about that. And one of the things that really caught my attention about this private company was that when they go into new markets, they've always been profitable within 45 days. What a nice way to run a business. And then the other interview we did was with I Am Cannabis. I Am Cannabis uplisted to the NASDAQ earlier this year. They've done 2 acquisitions in Canada. And they've also been doing acquisitions. They've become more vertically integrated in Israel, which is a medical market right now, but could go adult use down the road. I think that's pretty much it. So, one last one, and I missed it. I'm sorry. On the M&A front, I mentioned some American M&A. There was also M&A in Canada, and we saw Valons, which a year ago, these guys, all they were really doing was selling distillates, and that is a tough market. But they were one of the extraction LPs that have gone by the wayside, like Metafarm Labs and Neptune. These guys have really evolved their business model. They've done several acquisitions, a CBD company, another LP called Life Foods that got them into edibles. And so this week they announced the acquisition of Citizen Stash, a premium pre-roll and flower company. And then they also, with a very small grow, their grow tends to be more contracted out. So it kind of fits in with the asset-light model of Valons. And then they also announced that they were buying their customer, Verse Cannabis, which is a value brand for derivatives. So I think that was pretty much last week. It was an exciting week. So let me know what you think. If I get some good feedback, I will continue to do this. I hope you found it helpful. Again, if you are looking for more in-depth information, 420 Investors, where I really lay it all out. And of course, at New Cannabis Ventures, we get you the important news very quickly. So with that, have a nice Labor Day and a great week ahead. Take care.